right. Good morning, everybody. How are you today? Can you hear me? If you can, please type in the chat so I make sure that they're able to hear me and that my mic is working. If you could do that for me, that'd be great. I'm just gonna check here. Can anybody hear me? Let's see if I can. Okay. Okay. Cool. I think my audio is good. So welcome to our channel here on YouTube, Trade with UFOs channel. Our session today is called Nailing FX. We are an hour into the US session. I will be running these sessions in July a little bit more frequently. We are on FX Street. Myself coming up in July on the 7th and 21st of July, usually at this time, 10:30 a.m. New York time. And then we also have Opa on Wednesdays, Pedro on Thursdays, and Ronaldo on Fridays. So uh, you can find us there in July in FX Street, but also you'll find us here on the YouTube channel, streaming live every Monday, Tuesday, Wednesday, Thursday, and Saturday. And if you do want to see our full calendar, please go to www.tradewithufos.com /nailingfx. We have our schedule there for these sessions, and actually there's a lot of other stuff that we do, but here and you can explore that on our YouTube channel at any time. I mean, we record a lot of these sessions for you so that you can browse through, almost a year's worth. There's so much stuff out there that's incredible, and I hopefully you've been able to take advantage of that. And if you're new here to Trade with UFOs, then hopefully you will explore all of the resources out there. And what I will do is probably spend a little bit of time towards the end of the session, kind of helping you navigate through some of those resources, as well as show you how you can um, get more information about us, and also about me, what I do, and how I trade, how I look at the markets, and how you can find out more information from me. Okay, so before we dive into the actual markets, let's take a look at the disclaimer at the top here. Please read this carefully. Because especially if you're watching this as a recording, this video, any of the clips, the demonstrations are all for educational and instructional purposes only. And so Tradictive, we only provide these videos purely for the purpose of demonstrating a method of using our products. So that is Auto UFOs and Auto Climate. And please understand that all the content used in the video is purely for demonstration purposes only, and is not a guide and doesn't provide any indication or prediction of actual results. And so as a user, you understand and agree that hypothetical results obtained through this demonstration do not indicate in any way the results you may receive on using our products. Okay, so with that, let us go to the charts. And so primarily what I use, right, is TradingView. Okay, as you'll see here, right? It's um, it's something that oops, you can use, according to the free plan, okay, the basic plan, or you can subscribe to the premium or the pro plans. That's up to you. But we do have, our technology, okay, available on TradingView, which is perfect for all of you because you're able to really have access to so many different markets out there, whether it be the currency markets, whether it be the futures markets, or whether you use cash for differences, which if you're in the States, you don't have access to, but most of the people around the rest of the world do. And so TradingView is a great platform in that regard. Stocks, stock markets, everything. And our technology, AutoUFOs, works on TradingView and is used for analysis on any market that's out there. So as long as there's a data feed out there that TradingView offers, um, you're able to use our technologies. Okay, so I'll go more into that as we progress through this time that we have each other with each other today. And I'd like to start as we are at it's the 30th of June. It's the end of the quarter. And so, there's probably going to be some window dressing going on, maybe later today. The market's been open for about, just opened. It's been around for about an hour or so, more. And so, there's not been a lot of sort of price action, but there's on an hourly chart even. And and so maybe this afternoon, we may see some movement higher into the market, um, or it's just going to keep on going sideways or go down. Who knows, right? But we will see. We will see. But what we have here, okay, currently, if we just look at the bigger picture of how price has been moving, right, over the last month or so. We had this move up here in June. We do have this crash to the downside, and then a move back to these prior highs up here, right? And so we've been forming really a range over the last couple of weeks, and then we have this move lower now, right? And so what we've been seeing is really a test of or really the formation of a range. And if we're going to see a move back to these prior highs again, then we are going to need to see price move above this prior high here in order to get back up to these areas or even higher, right? We'll see how the market wants to move, probably going into July. But one reason why I'm starting with the equity markets is because there are correlations, right, to various equity, various currencies, right? So if we do look at the dollar yen, for example, right, there are at times correlations uh, you know that align, right, with a strong equity market is a weak yen, right? So which really relates to the carry trade, and so Aussie yen at times has this type of relationship, right, where as the equities go higher, right, there's appetite for risk, and so the Aussie dollar is attractive, and people buy into to Aussie and sell yen, right? Because yen is negative interest rates and Aussie is positive interest rates, right? At least for the moment. And so there is some attraction there, sometimes some sort of correlation. And so we have seen, there's been this move higher in Aussie yen. We probably also see similar things with as the yen weakens, right, moving into to Aussie. Do we see similar patterns with CAD yen, right? Uh, you know, are we seeing similar things with the Swiss or the Euro yen, the pound yen, right? So this is something that we can we can look at, right? As we look at the equities, what's going on with the yen? Do we see a weakening of the yen? And so we are seeing, versus the other pairs, this type of um, you know, movement away from the yen into the other currency pairs. And then it's just a matter of working out, well, which is the strongest, which one is the weakest versus the yen, and then you can pair it up accordingly. Um, so here we see the euro yen, right? And all of this, right, is at the end of the day a relationship between the trade between each of these countries. I mean, that's one way to look at currencies. Really the fundamental demand and supply, right, for currencies is really driven at the end of the day by trade. And so the relationship between the movement of goods, right, between these two regions, Europe and Japan, is really something that's reflected, right, in these particular currency pairs, right? So uh, so there's just some perspective there, in correlating markets, right? And but what is of interest really, I think, if we look at these various pairs, right, is going to be the um, this movement, right, of stronger versus weak. So if the yen is weak, right, of these pairs, right, which one is looking pretty strong at the moment, right? So one thing that we could look at, right, even if we just look at the dollar pairs, right, and just see relative to the dollar, just these simple, price changes, right? It's clear, at least currently, right, that the pound is running pretty strong, right? It's had a pretty strong move to the downside, and overall for all the pound overall versus the other currencies all being pretty weak, right? But now we're starting to see this move higher. So one of the markets that we can look at today, right, is going to be the pound yen. So let's break this down a little bit, right, to really understand what's been going on. So let me use a fresh chart here, just so that we can um, really get a good perspective of of the market. Okay, so so first of all, okay, let's just take a look at um, at the daily time frame first. Okay, and let's just understand, how's price been moving. Okay, for the pound yen. Okay, and I'm just going to give us a little bit more real estate here. Okay, and also, right. Okay, so I'm going to turn on auto climate. Um, okay, and auto climate is a algorithm, right? It's an app, right? That basically, helps us identify whether we want to be, whether the market environment is telling us to be biased up or to be looking for downward movements, right? So is the climate indicating to us to look for shorts, or is it a climate that we would want to look for longs, right? So if you are depending on what sort of style of trader you are, right? For us, if you are a swing trader, right, you would either use the daily or the 4 hour to make an assessment of climate, and then the corresponding timeframes to look for opportunities to enter, short or long, right, depending on the climate. So you'd want to look for shorting opportunities if the climate is down, as it is for pound yen in this case, right? Or if the climate is autoclimate is telling us blue, right? And it's got a solid circle here. So let me just zoom in a little bit so you can see where that difference is. Okay. So there are times when the market environment is telling us to go long, right? And we would need to have a solid circle here, right? Whereas if the circle is not solid, as in this case, it's very narrow. Okay, it's a small little dot, right? That would be telling us that there's no confirmed climate, and therefore we should do nothing in those sorts of situations, right? But if we get a solid circle, right, then that's a confirmed, in this case, downtrend. There's a solid blue, emerald, sapphire blue, then it's a confirmed uptrend. Okay, so very simple to use. Then we also have these other statistics here, right? So this is where the value kind of comes into the app, where currently, right, we have had a down climate for 13 days. Okay, so this is how you read it, right? Is that these dots represent days, okay? Because we're on a daily time frame. If you're on a 4-hour time frame, then the climate would be telling you what is the climate on that 4-hour time frame, okay? And so each of these dots would represent on the 4-hour time frame 4 hours, okay? So here uh, we have 13 days, right, where the climate has been telling us to that it's down, right? Statistically, right, the number of down days has been more around 5.77. So let's say 5 or 6 days, right, on average, right, or statistically. Pound yen usually moves up statistically 6.36 days, so again 6 or 7 days, right? So we've had a downward move quite for quite a while, right? It's been quite extended, and so what it's telling us then is that, hey, if we've been in this down climate for an extended period of time, then we want to set our expectations that maybe this continuation to the downside is, it's weakening, right? At some point, it's going to stop moving down, which we have been seeing here, right? It's tried to move down, then it moved up a little bit, then it kind of rolled off down, but now we have some buying pressure come in this week, right? Or at least today, right? So it kind of paused yesterday, and then now we've seen a move higher, right? And so from a pricing point, right, where price currently is relative to where it has been, right, over the last couple of weeks, you really would say that, okay, well, any move to the downside or any further move to the downside, I kind of need to be cautious of that, right? So that's what the market climate is telling us, that we want to look for shorts, but because of this extended move to the downside, we probably just want to be careful that maybe we are seeing some potential change in trend, and as soon as this market turns to unconfirmed, then we would need to reassess whether the the bias that we want to have is to the downside, or not. Okay, so what else can we see? What else can we see here? Just to bring in some thoughts around, you know, um, where what is everybody else looking at? What is everybody else interpreting from what they're seeing in dollar yen, right? They're going to be seeing that, hey, look, we've tested these lows before, so we probably have some sort of support here, right? If you kind of follow with these ideas of support and resistance, right? So looking at where prices has kind of bounced before, right? To those who are looking at support and resistance, they're going to be saying, hey, we've hit this area of support here, right? And so, you know, so they probably also would be looking, for a bounce higher, right? Because price it was supported here, it didn't go lower than that, right? Even if you take these wicks here as a range, right, of where price has traveled in the past, right, and kind of been supported in that regards, we have this area here, right? So any moves, right, to the downside is limited until this price point here, 131, say, let's round it out to 65, just to kind of round out the numbers here a little, right? And similarly, if we look at where price had broken, right? So we have these lows here, right? And that low had been retested here. So this area of prior support, right, is now somewhat resistant, right? And so we could be looking at this area here, right, as a potential area of where higher highs need to break through in order to get to higher prices, right? So we've got this high here, right? And again, this is probably an area of a retest of a prior support to resistance, right? And so why are we kind of looking at this level is because, or at least time frame at least, is because we're really just trying to understand, especially if this is the first time you've looked at pound yen, we just want to understand, well, what are the indirect forces that are going to be affecting, the movement of price, right? So other people, right, market players are doing this assessment, right? They're using these concepts to interpret the market and to understand, what is going on, and maybe where they see, where they want to place their orders themselves, right, or not, right? And so they're making their assessment based on these interpretations, right? These concepts which they have learned, right, or were taught, right? So we want to understand that as well, right? We want to understand what those indirect forces are influencing people's decisions, right? And that kind of helps us, right? That helps us to know what other people are thinking, and therefore where there are potential pricing points that could also affect what we're doing. Just turn off these alerts here. Okay. All right, let's turn off that alert. Okay. All right. So at the macro level, okay, these are just a couple of areas of interest, right? That we just want to keep in mind, especially on the short term, right? As we see prices have really moved within this range. That's the other thing we can see from this time frame, right? Is also that prices are really in a range, right? There is no clear or continuation to the downside in this case, since we have this move here in the pound yen moved above this daily high, right? And given that the lows being supported, right? That we don't have a continuation of a downtrend here. That is, at least not from today's price action, right? It's not telling us that. Um, and so do we have a range? We don't have a downtrend, right? We don't have a continuation of a downtrend. We don't have an uptrend, right? Clearly we don't have an uptrend. So all that we can say is at best, right? We have some sort of ranging market, right? That we need to set our expectations around, right? So why is that important? It's important because, if you are a swing trader, right? So if we're looking at this market from a swing trading style perspective, right? Where we're not looking for just the 1-to-1s or 2-to-1s, we're looking for, more like 4 or 5 or 6-to-1s, or more, right? For a swing trade, right? That lasts over days and weeks, if the average true range of, common market is, say 60 or 70 pips, a day, then, we're looking for, even if it's over 5 days, that's 350 pips, right, of movement in a proper swing type of environment, right? So if we want to, kind of, understand what that sort of move looks like from here, right? Let's say even just say 300 pips. Okay, what does that look like from here, right? At this point, well, we're looking at getting us back up to here, right, above these highs, which now you want to have an uptrend, right? And so at least when you're looking at planning your trades, right? It's all about planning and setting your expectations as well, you know. So that's also an important part of your preparation analysis, right? Is to make sure the expectations that you have matches the style of trading that you have, right? And so if you're an intraday trader, you're not going to necessarily be looking for, a 300 pip move. You're probably looking for, 10 or 20 or 30 pips sort of thing, right? Um, and so that's something achievable, right? Within a day, you're in and out within a day, right? 24-hour period, right? That's achievable, and you may just do a couple of trades, right? Of 10 or 20 pips each, and then that makes your money. Trading with leverage, trading with size, right? And so your assessment of the market and your setting of your expectations of the market would be, would be different than a swing trader, right? So 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 it's at this higher time frame, this common time frame that we have, that we can, get a sense of what's going on in the market. Where can price move? Where do I want price to move if the opportunity presents itself? And therefore, how do I position myself accordingly, right? So if you are looking to you know position into a swing trade, right? And you are wanting, right, to set your expectations, right, such that, um, you are going to get a move, and position yourself for a move to for 300 pips, right? Then you want price to really, if you want to be conservative, right, you'd want it to break out of these highs here, right? And in reality, you probably want it to set, some sort of price action, right? That indicates to you that price is moving in the way that you expect, right? So you're going to be wanting it to do, something like this, right? As it comes out. So let me just change this. Okay, right. You really want it to be doing this, as it comes out of this area, so that you could kind of creates a new high and it pulls back and then moves higher, right? That's really what you want to see happen. What you don't want to see happen, right, if you're a conservative trader and you're trying to position into a swing, is this to happen, right? You go long here and then suddenly it does this, right? That's not what you want, right? So you need to understand, well, what is the market uh, you know doing at this point in time, and does it present you with an opportunity for a 300 pip move, right? Or does it not, right? If you're looking for the 300 pip move, then it's going to have to uh, you know behave in a way that gives you that comfort, right? That it is moving in that particular fashion, right? Otherwise, otherwise you just gotta sit tight, right, and move on to something else, you know. So currently, right, the only expectation that you can really have is to short, really, right? I mean, that's what the market climate is telling you anyway, right? Is to short, but if it does break, right, above some of these highs, then you will consider potentially going long, right? And you would want to see the climate go up, change to blue, right? Confirmed up climate, right? And therefore price action, if that's really what's going to happen, right, is going to have to prove itself to be in that way, right? So let's look down. Okay, so we've got the auto climate, right? That's telling us to expect a down environment, right? So if we do go down to our hourly time frame, okay, and we don't need our UFOs anymore, sorry, our climate anymore. Okay, what we want to look for, right, is now the price locations at which it would be good to go short, right? So this is where the auto UFOs come in. Okay, so auto UFOs, right, tell us those areas where there are high concentrations of unfilled orders. Okay, that's what UFO stand for, unfilled orders. Okay, so what we have here, are the auto UFOs. So conveniently, right, we're seeing, right, where those areas of prior support that has become resistance, or support that has become resistance. I mean, those perfectly, or coincidentally in this case, align to where the audio UFOs are. So what we have here, if this is the first time you've seen the audio UFOs, right? What the circles are UFOs. That's kind of the optimal area. This whole range, right, is where they're, the technology is telling us where the UFOs are. Okay, so okay, so if I just draw a kind of highlight the area, okay, and highlight this other area as well up here. Oh, okay, where the UFOs are, all right. And there's another area up here, but it's a little far. I'll just leave that for the moment, right? And then we also have the green UFOs. So what the green area signifies or identifies are those areas where there's a high concentration of buy unfilled orders. Okay, so if I want to annotate this a little for you, right? Green unfilled orders. Okay. Okay. Or by UFOs. Okay. And make them a little bigger. Okay. And then up here, okay, where we have red. So red unfilled orders, okay, are sell UFOs. Okay. All right. So I did have a question on my other chart where I had D and bracket S. That was kind of my from a daily perspective. You know, I'm looking at a an I've got a bias to short under that area. So that's what that line meant. Okay. So that was just a prior, it was prior high. I think it was like on the other chart I had it, you know, probably about here, right? So that was a day, you know, on a daily perspective, on a daily chart, right? That was a high where um, underneath which I want to be short, right? Okay, so that's a prior. There's a high, right? Okay, so I can just take those off, okay? So that I can see my charts a little better, right? Okay, so this is that other area of unfilled orders. Okay, so let me go back up to the daily. Okay, just so that we have a perspective there. Okay, so I want to stay short, right? So climate was telling me to stay short. I've got this high underneath which I also want to be short, right? Because if we get prices moving above that prior high, right, which is really a pivot high, right, then you know the downtrend, the continuation of downtrend is probably going to be in doubt, right? Because this is either a you know sideways market or which I can short at close to the highs, right? I can still short close to the highs, or it's going to be you know some sort of down continuation of a downtrend, which it can still do, right? It can still do, but it can't. It's not going to exist if that prior high is exceeded, right? So that's how I you know plan for you know or at least set my expectations around the type of opportunity that is in front of me, which is not a you know it's not a long term, right? I can't expect to have a long term trade out of this, right? You know, and if I just look at where the green UFOs are relative to the red UFOs, right, and setting my target, if I do go short, right, and my risk is fully at the you know that pivot point there, right? Then my expectations for the type of opportunity, all right, that I can get is not even 2 to 1, right? It's only 1.75, right, to 1, right? Given that risk and that you know that the buyers are going to come in at this point, right? So this is where we really need to uh, use the y- the technology, right, to help us really understand where are those areas where the buyers and the sellers got to come in, right? And and until all of those orders are filled, right, you're not going to get higher prices, right? Until these buy orders are filled, you're not going to get lower prices, right? So we need to use this, right, to our advantage to understand that hey, I can't expect the market to move higher or to move lower until these orders are absorbed, you know, and so therefore, I'm not going to target, right, um, prices to be down here, right, because I got to get through this first, So let's make my life a little easier, right? Let's set my expectations appropriately and recognize that, hey, look, I'm not going to get 2-to-1 trade out of this. So let me just use a smaller position size. Let me risk a little less, right? And maybe let me just take a 1-to-1, and be happy with it, you know. Maybe that's part of your trading plan. That's what you decide to do, given this is what the market is how it's currently trading, right? This is how it's currently trading. Now, if price is going to break through here, right, and then you know retest that prior high and then move up, right, like that. That's at that point, right? Once I have a broken a prior high, set a new low, right? Then maybe that's where I get in at this point, or I get in, if it does another swing low and then moves higher, right? So the opportunity is still there, right? It's just, are you going to let price do its thing, right? To tell you what is the appropriate trade to make. Uh, so if you get this break and then maybe this is how you know this is how it works, right? Is this is the risk here, and you know there's a 2-to-1 right here, right? There's you know a maybe a 5-to-1 sort of opportunity, even higher, right? So let me just check a couple of chats here. Okay, calibration. So I'm just using the so there's different so there's some back testing that you need to do to really find out the type of calibration that is that you want to have. Uh, you can use a Fibonacci. The standard is 50, 0.5. If you want to be a little bit more you know test things differently. I mean, you can use a Fibonacci number. I mean, the best thing is really to just um, you know uh, test it out, right? See what sort of back testing results give you, right? And just kind of play around with it. That's what I would recommend there. Okay. All right. So yeah, because the other good thing about doing that as well is to really understand the markets, right, that you're trading, and what parameters would work best with those particular markets, and then you either find out that, hey, that one calibration works for all the markets, or it doesn't really matter to you, or that there's a certain parameter, calibration which works best for trading pound versus the euro versus the Aussie versus the Swiss versus there's, I mean, I wouldn't go kind of too crazy, right, and try to test you know every sort of increment, right, but to get a sense, right? I think first of all on what do different calibrations do? How does that affect the you know the UFOs that are identified, right? And how does that improve your overall precision, right? So that's what the calibration is there to do, is to either give you more precision in or allows you to obtain more precision, right? And filter out opportunities which don't fit that calibration, or it's going to give you uh, a wider you know um, precision, right? Or be, I don't want to say less precise, but uh, gives you more forgiveness. Okay, I use that word forgiveness in terms of giving you, again, filtering those opportunities which don't fit those parameters, right? And so that's what would be the best thing to do um, by market, because it really depends on what are you looking at. If you're looking at Forex, then yeah, the behavior of of the different currencies is different. I mean, you look at commodities, currencies, Aussie, New Zealand, kind of moves differently than commodities such as commodity currency such as Canadian dollar, which is more linked to oil, versus agricultural type of products, or iron ore, first in Australia's case, right? So yeah, that's why you really want to um, look at you know testing out different calibrations for the markets that you want to look at. Okay, but back to pound yen. Okay, the movement, right? The movement in price, if it breaks the prior high, then yeah, I mean, it's going to retest, right? It's going to have to retest at some point. So just watch out for that. Watch out for the break. If it breaks the high, watch for the retest, right? Look for UFOs that form, on the way up. It's going to be green UFOs, right? They're going to have to form, and look for those price structures that are going to be around, or the UFOs that are going to be around the prior highs, because it's probably going to want to retest that prior high, depending on whether you got you know unless you've got a lot of momentum, right, that's pushing price higher, then it's not going to retrace, right? Or it's not going to retrace as much. And so, just wait for the market, to tell you, right, if there's going to be continuation higher, um, you know, first, before you try and trade it, So if it is going to move higher, right, then yeah, that may give you, the reasons to now consider, um, you know, higher risk reward type opportunities, and therefore, the potential for a proper swing trade where you can get, say a 300 pip move, right, to some point, right? But then again, right? Well, where are the UFOs, right? Where are the UFOs? on your time frame that you are looking for opportunities, right? Um, you know, where are they, right? And you may need to you know look at again, where's your calibration, right? What's your calibration? What's the time frame that you need to look at? I'm just using a 3 hour just because I want to. So TradingView will give you 4 areas uh, of sell UFO concentrations, right? And 4 areas of where there are concentrations of buy unfilled orders, right? And um, so again, this is kind of goes towards the what do you how is price kind of aggregating things on these different time frames, right, to give you the level of detail that you need, right? And so I just am using the time frames as well as a way to set my expectations of where are those concentrations of unfilled orders, and does you know the price action, right, that formed those UFOs, help me to interpret things better or not. Okay. Um, okay. So did I answer everybody's questions? All right. Let me just pause there for a minute. Just want to make sure that I covered everybody's questions there. So versions I did earlier. Um, yeah, Wayne's I did. Okay. While you, yeah. Okay, good. All right. So again, let me pause here. Does anybody have any other questions that you have for me at this point? Let me just turn these off. So okay. All right. So I spent quite a bit of time today really just setting the scene. So if uh, for how we can use the auto climate, how can we use the auto UFOs to help us understand where what the climate is, right? What is the overall climate telling us to do, which in the case of pound yen was short, so we want to look for selling opportunities, right? Where are those selling opportunities? Well, that's where you need to go down to your lower time frames, right? And turn on the auto UFOs, right, to tell you where those selling opportunities are, okay? And then you determine how much risk you are looking to take, right? And make your trading decision accordingly, according to your plan, right? Of course, you're, I'm expecting that you would, you know, have other uh, steps in your own analysis, right, to determine whether this market is one that you are interested in trading, right? Because some people don't like sideways markets, right? They don't like sideways markets. They like trending markets, and so immediately you'd probably filter out this opportunity, right? You'd say, no, this is not for me because it looks like it's just going sideways. I want to see it, uh, you know, in a trending mode, right? Which is just not what is happening here, right? On for swing trading, right? And so do you have those rules defined, right, to allow you to look at the pound yen when the markets have broken the prior high, right? And maybe you just wait for sort of a retest, right? Again, it depends on how, what sort of rules you've set for yourself, right? And how in terms of how you make your trading decisions, you know. So that's kind of how things are playing out for pound yen at this time, right? Is that it's a sideways market, and probably not much opportunity at this point for any sort of swing trade. There is a short-term trade opportunity to go short, which is in alignment with the climate, right? And that's what you would tend to do really in sideways markets is, sell at the extremes, right? Sell at the highs, close to the highs, and buy close to the lows, which is kind of really paying off at this point, right? If you decided to go long, right, on the pound yen, right, you had multiple opportunities. I mean, is an hourly chart, right? There's many opportunities. You'd have to really wait it out, though, right? But you know, you're getting the payoff now, you know. So is that something that is how you do things? You know, that's for you to determine. Okay. All right. So any other? Just see. I've got another question here. How can we scan for opportunities? Good question. Very good question. Um, so the easiest way really is to have. So I've got all of the pairs that I'm interested in, right? That I'm interested in here, and if you know what your trading style is, right? You've kind of determined what your trading style is. Then if you're a swing trader, right, you'd be looking at the daily or the 4 hour. So what you'd want to do is really just start with the 4 hour, right? Sorry, the daily, right? And then you just start from the top and just click down, you know, and you just see, well, okay, and maybe you have a notepad or an Excel spreadsheet or something that can help you just quickly mark off, right? That so Aussie on the daily, well, it's a down. It's in a down mode, but that is not a confirmed down signal, right? It's not a confirmed climate, and so you just ignore it, right? And so, same for the New Zealand dollar, no trade. Euro, it's up. Okay, so you're looking for buys to go long. Pound is down, so you're looking for shorts. Dollar CAD, up, looking for longs. Dollar yen, right? Unconfirmed, no trade, right? And then you just click all the way down, right? And so if you're not interested in all of these pairs, then your list is going to be a lot shorter. If want to look, these are, I think I've got 30 symbols here, right? You just put them in your watch list and you just spend, it's not going to take you longer than really 5 or 10 minutes to click through even 30 of these to kind of tell you whether the climate is telling you to be long or short, right? And then you see, right, if you see this as so pound, right? We saw that this was um, a down climate, and if the structure, right, is telling you that hey, look, the overall movement currently is lending itself to a continuation lower, then filter and pick on that one, right? But in the case here, right, of the dollar CAD, right, it seems to be it's an up, it's telling you to be bias up. Um, but is this kind of telling you that is this a channel up, right? if that's what you are you know seeing, right, then that needs to be a you know that would be a filter for you. So I guess you need to come up with uh, you know the steps, you know the patterns, if you want to use patterns to define, hey, what sort of um, what's currently going on, right? So if this for you is a ranging market, right, and you're okay with ranging markets, then you would trade it accordingly, right? Because there's no clear direction here outside of the pound, right? In the pound, you do have a clearer, move, right, to the downside, right? So it's a down channel, whereas as CAD at the moment is kind of sideways, Swiss the same thing, right? Swiss is the same thing, you know. So so use climate on the one hand, and then secondly, the other filters would be how you define what you're currently seeing, you know. So hopefully that kind of helps you identify one way to look for opportunities, Amit. Yeah. All right. Any other questions before we wrap up? I'm a couple of minutes over now. If there are no other questions, I actually did want to go to this trade with UFOs / Andrew. If you type that into your browser, that will bring you to this page here. So if you are interested in finding out more about the apps or more about how I kind of look at the markets, through any of these sessions, if you are on the recording, and you did have questions you want to ask me, then just come to Trade with UFOs / Andrew, type in your name, okay, and your email address, and just register here, right? You may have then once you do that, you'll be able to post your questions here, or you can search for questions, right? So there's a new feature that we've just rolled out. So if you do have questions, they're going to be questions that more than likely other people are going to be asking, and so we're starting to build this FAQ out, and so please feel free to do that. All right. Okay. So I'm going to end there for today. Let me just put up the presentation one more time so that you can get the link, right? That's where you can send me questions. We also have the schedule for July coming up, and again the YouTube Trade with UFOs. I didn't have time to kind of show you some of the resources this week, but I will do that in following weeks. Okay, well, hey, thanks for spending your morning with me the last hour or so. Do trade safe and enjoy the rest of your day. Okay, we'll see you next time. Bye.